Happy Fed Day. Happy Fed Day to you, friend. Today, the Federal Reserve, they meet. They've been meeting for a day, and they're going to release information. They're going to tell people what their outlook is. They're going to raise rates. But how does that affect you if you're trying to buy a home? How does that affect you if you're only interested in mortgage rates? Because most people, whenever they hear the Fed's meeting, they're going to raise the interest rates, they automatically assume, or they believe that's going to raise mortgage rates. Well, let me tell you why raising mortgage rate, or why raising Fed rates, is actually going to help the mortgage rate over time. Mortgage rates trade, they move with inflation. So the way you kill off inflation is you raise these Fed funds rates. The Fed funds rates, which are going to go up to today, that raises credit card payments, car loans, commercial lending, overnight lending. That's going to go up. That becomes more expensive. As those rates go up, it eventually kills inflation because there's not as much money in the system because it's got to go to higher credit card balance or a car. So over time, as they raise rates 6 to 9 months later, that rate increase will soften up the economy a little bit. The higher they raise it, the quicker it will happen. So they started raising the rates, I think, around March, somewhere early spring, just like 25 basis points, which is not a lot, but they started raising rates in the beginning of spring, sometime around there. So 6 to 9 months later, let's say October, for example, we'll start to feel that. And I think now you're starting to see the economy is starting to slow down a little, but inflation is measured year over year. It's a 12-month rolling measure. So our inflation is going to be measured coming up over last September. Well, last summer, inflation went down a little bit, surprisingly. So what they're comparing today's inflation to was a lower level. And that's why interest rates have gone up. This may be confusing. I may not be explaining it good. But last year at this time, inflation was lower. This year, it's higher. So the year over year is going to be a lot uglier. That's why interest rates have moved up. So rates are going to come out today, or the Fed's going to release data today. They're going to give an outlook, and they're going to raise their rate. Most people think it's 75 basis point to a point, which will slow us down in 6 to 9 months. So raising rates will help mortgage rates. Whenever inflation comes down, I anticipate inflation is going to start to look different in October. We won't see that until it comes out in November, but rates will start to come back down, I believe, later in the year and definitely into the first quarter of next year. So just want to pass this along. This is how raising the Fed rate is actually going to help mortgage rates. So I could be wrong, but this is what I believe, and I'm just using pure logical common sense when you look at where inflation was last year, late in the third quarter and fourth quarter last year compared to this year. So just want to pass this along. Hope you have a great day.